Hey everyone, I wanted to do a quick trade recap over the pound yen trade I took this past week. It was a phenomenal trade, and here's the analysis behind it. Kind of jumped the gun a little bit, and I'll explain where I should have entered and why I entered where I did. But yeah, there was an opportunity for just a perfect entry. I know a guy who got in literally at the bottom of this candle spike here. Um, so you could see price broke out of this high last December. That 148.50 level, give or take a couple pips, and you can very visually see the supply zone turning into a demand zone, especially on the 4-hour chart. That decision to break that level, the orders that initiated that impulse move were collected, right here. So if you drag that over, we'll just extend that over, you can see, very clearly that what once was a supply zone has become a demand zone, right? So, yeah, this was the perfect entry. There was a lot of, confluence there. So we'll go into that. Let's look at that real quick. So, once we retested that demand zone and found buying interest a couple times, we slowly, were consolidating, ranging in a downward channel. Just a choppy mess the past couple weeks. Some good trades in there, believe it or not. Some of my best days in no, 2017 were actually within this, just literally selling the top and buying the bottom as it bounced back and forth several times. Just really nice swings, day trade swings, 100 pip little ranges here and there. So it was really nice. But you can see that channel bottom terminated for a final time right there at that double bottom, mid demand zone, right there. And if you take that, the impulsive move that kind of broke that old high, that's the 50% fib retracement right there, right? So that's your perfect entry. And if you zoom in a little bit more on the 1-hour chart, it even kind of completed a little ABCD pattern right down there. You got a nice little profit target on this little downward move, and then retracement up to between the 50 and 60. It just tanked right to that level, and then that's where the big boys were, and they just laid it down. They just brought it up, right? So that was the ideal entry. I know a guy who got in at 146.99.6 and had a standard lot on that, and he just banked, right? So that's where the perfect entry was. My entries were not there, obviously. They were right here. And the reason why it was, I kind of let my emotions get the better of me. I've been talking about this potential move for probably the past couple weeks. Really since this first little channel initiation was forming. I said, be on the lookout. This seems like it might be decelerating, and especially when we put in this higher low. I actually put in a let's see here, a kind of a trade idea on this, on the pound yen inverse head and shoulders that I spotted, and I just kind of let this cloud my judgment, my better judgment. I had taken that demand zone off my chart, and I was just kind of too focused in on that. But you know, that happens sometimes. You just have to learn your lesson. So that let me clear this up here. We kind of know where the perfect entry was, so let's look at where my entries were. So I spotted that potential inverse headed shoulders kind of at the lower channel bottom there. So I was looking, you know, at, yeah. So I was kind of looking at that, and I still considered it valid because it hadn't, once it put in that this shoulder here, it really hadn't you know, made any more movement to the downside, and it was actually kind of putting in some lower highs. So I actually had a limit orders right here where it filled, and in fact I just kind of used this as like a potential demand zone, and you know, kind of put my limit orders kind of right above that. And you know, there was some more confluence going into it. It didn't just blindly put it in there. So, you know, I had the, you know, 78.6 fib retracement right there. You know, I had let's see here, these this was kind of right down around some confluence for me, and I just, you know, honestly, I just got too sucked into the 1 hour chart, which I shouldn't have done on with it so close to that demand zone. You know, I've been trading for a couple years now, a few years, and you know, I still, you know, I get kind of stuck. I started out day trading, so, you know, I'm not, you know, the 1 hour chart, 4 hour and 1 hour chart are really kind of my bread and butter. But I just got too sucked into the 1 hour chart here, and you know, found this little confluence right here, and went ahead and executed it. Now my swing account survived this spike down because I did have that demand zone on my chart, and my stop loss for that, let me zoom back out to the 4 hour chart. My stop loss was actually just below that. You know, so that's the demand zone. I just didn't know, you know, it was FOMO, I guess, fear of missing out. You know, I was anticipating this. I saw the deceleration. I saw the little higher low here. So I, you know, I jumped the gun. But you know, risk management, you know, is one of the most, probably not, maybe even the most important thing. That might even be better than even, you know, technical analysis. You know, if you can manage your risk appropriately and you have even just a, you know, halfway decent trading system, you can just, I mean, just take money pretty much at will from the markets over time. So yeah, I mean, risk management is everything. I had about 140 pip stop. That was pretty spot on for my swing account. Now my day trade account, I entered, all my entries were essentially right around 147.90. Those were pretty much all my entries on both my day trade account and my swing account. So we'll just kind of average them together. You know, there was one that was at 92, there was one at 88, so we'll just call it 147.80. And initially they were good for about 60 pips off my initial entries, you know, right around here, first test of these levels here. But you know, I got stopped out on my day trade account. I had that just below the head of that inverse head and shoulders, right there. It was, you know, probably right around 147.50 was probably my day trade stop, which was essentially the top of that demand zone. But you know, so I got stopped out as it spiked down in there, and survived it on my swing account. Now I was able to re-enter once I saw that push to those levels. You know, it double bottomed. It had all that other confluence we just talked about. I knew this thing was ripping to the upside, and that's where the big boy orders were. And I was at my charts and I was watching it as it stopped me out and it pushed down, and I thought about buying about 140, right around 147.15 or so, right around where some of that confluence was. But I was like, I just took a loss. I don't want to try and revenge trade or anything. But once I saw that ridiculous rejection out of that level, I knew that that was where the orders were sitting. And it just ripped 200 pips. From here to there. That's let me just get my thing here. So that's let's see here. That it was a 200 pip push up and then a 100 pip drop, and then it just took off from there. So much stuff. I don't know if there was any fundamentals behind that or what, but I actually, I just got finished telling you I got sucked into the 1 hour chart. Well, I actually entered my other day trade account on the 15-minute chart at this little confluence point here. It was essentially the same little level here that I entered originally. Now this day trade account, the second entry was 87. I know that right off the bat. So it was essentially, right where my original entries were at, and I actually had the same stop loss on that at 147.50. So, literally as price hit those lower levels, spiked up 200 pips, retraced, 100 pips in just that one 15-minute candle, I executed manually right there. And I can't remember if price had made this low. I want to say that I actually caught it on the way back up because this was just such a fast move. I mean, it was, I don't ever drop down to really the 5-minute chart, but I'm pretty sure price spiked and made that low, and I caught it on the way back up. Like it just moved too fast. You can even go down to like a 1-minute chart. I'm pretty sure I looked at the 1-minute chart after all this happened, and that 100 pip drop was within 1-minute candle. Jeez Louise, that's, yeah, look at that. Yeah. So I don't know where exactly I got in, but that is 104 pip 1-minute candle. So I got in, I don't know, somewhere, that was my entry. It was a market order. I'm not sure if price had made the low already or not, but as soon as price was retesting down into those levels, this general area, I opened my position. So where I took profit at on my day trade account was, I took it off in chunks. I was completely out around 152. Which was kind of right up around this area here. This area here, kind of, you see that little resistance there. So I was completely out, I think around 150 on my day trade account. I did take some profit off right up here as well. Right around 150, I think 150.20 area was where I took some profit off, and was trailing my stop on my day trade account. On my swing account, I did take some off right up around 152. I'm still in that with a profitable stop loss. I think my stop loss is somewhere around 148.50 or somewhere around there. So I'm not sure where this is going. There are some higher time frame levels up, around 150, 160, somewhere up around there. So we'll see. I'm just glad I was able to capitalize on this move. So we'll just have to play it by ear and see where price goes. I'll, more than likely, before price gets if price makes its way up here, I'll probably get trail stopped out, but we'll see.